Hi, everybody. It is January 7th. Scott Riley, the market update desk with Mortgage One, NMLS number 157524. Well, we're starting the day pretty good in the bond market. Let's kind of go through why. So, yields got a little bit of a leg lower today. And the reason for that is ADP reported that private payrolls increased 41,000 in December. Now, that is slightly lower than what the market had forecasted at 48,000. The previous report, so for November, was revised higher by 3,000. So we still had a net lower than expected. Quote, the labor market has been weakening, but we are seeing some pickup in hiring in the hotel and restaurant industries, likely due to the continued decline in immigration, indicated by Eric Teal, Chief Investment Officer at Comerica Wealth Management. That was on CNBC this morning. He also indicated hiring in healthcare remains resilient and likely to offset declines in related AI adoption going forward. That's very important because a lot of the concern is job loss due to AI, but maybe we're going to offset that in the whole spectrum of things with some of these areas that are not truly affected by AI. Small businesses added 9,000 jobs, whereas large companies only added 2,000. This was a reversal from the previous few months' reports. Within the report, it showed 3 of the 10 sectors lost jobs. The largest decrease was in professional services that had been moving upward the last 2 reports. The largest gainers were in education and health services yet again. And obviously, that's just not affected as much by AI and many other things. In related to wages, job stayers had their wages increased by 4.4%. That remains unchanged from the previous report, and it actually did go down in the previous report. Job changers' wages grew by 6.6%. That's up 0.3% from the previous report. So we're seeing some tilt back to the job changers. Now, the JOLTS report, the job opening and labor turnover survey report, showed 7.15 million jobs openings versus the expected 7.6 million. That's a big difference from expectations to what the final numbers were. Now, keep in mind when we're saying 7 million job openings, many jobs are reported multiple times because there's many jobs that are remote now. And you may do that advertising in multiple different locations, multiple different outlets. Also within the report, we showed hiring rates fell from 3.4% to 3.2%, kind of another hit to the labor market. Meanwhile, in the service sector, we're seeing the ISM Servicing Index rising to 54.4% in December. That's up 1.8 percentage points from the November report and higher than what the market estimates were at 52.2%. Now, a good thing within this report is the prices paid component, which is a reflection and impacts inflation, was lower than expected. So that's good. Mortgage applications last week jumped 10% on some lower interest rates, and refinances were up 108% week over week, specifically within the purchase market. This is why we're telling everybody this is what we're going to start seeing as we go forward into the spring market. It's going to get busier. It's better to find something now than in the spring when you have significantly more competition out there, which could create price challenges or challenges within your offer. Appraisal gap guarantees, waiving inspections, losing out to cash buyers. So there's a lot of reasons to go now versus in the spring. One interesting thing today in the stock market, specifically within a company, Alaska Airlines is announced an ordering of 105 more Boeing 737 Maxes and 10 of their 787s. That's a big jump, and we are seeing Boeing stock doing better today as a result. 10-year treasuries is coming back down. We're at 4.13. We were at 4.165. So we're having a good trend. The main thing is, will we keep it up heading into the end of the week, and what will the BLS report show us? We'll keep you up to date. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. Give us a call. We'll help you through all these numbers. and look at different loan options for you and scenarios. 616 293 2189.